China says its economy is back on track. It says it's the only country that will show some economic growth by the end of this financial year. Chinese exporters are doing record business. Chinese pharma giants are selling vaccines. It's a win-win story with lots of money flowing in. But scratch the surface and you'll find a glaring crisis. If so much money is indeed flowing in, where is it going? Why are Chinese corporate giants sinking? Why is Beijing not being able to save its companies? Here's a revelation. There has been a string of defaults in Chinese companies. And not from some random businesses. These are big companies backed by the Chinese state. They're all defaulting. They've not been able to pay back more than $6 billion this year. You heard that figure right, $6 billion this year. That is 40 billion yuan in bad loans. The lenders have not got their money back. So here's what we have. China is the world's biggest creditor, but it can't keep up with its own EMIs. Defaulting. There is panic among global investors because among the defaulters are some major names. We have a list. It includes Brilliance Auto Group. It's BMW's partner in China. It has defaulted on $987 million of debt. The parent company of Brilliance Auto Group is Yongcheng Automotive. They too have reported defaults. Another big name is Singhua Uni Group. This too is a state-owned company. It has defaulted. It cannot repay the principal on a $450 million bond, $450 million. The company owes $2 billion in additional debt. Now investors are worried. Is their money lost? Will the company be able to pay back at all? The third name on the list is Yongcheng Coal and Electricity. It was known as China's grey rhino. Now it is known as a defaulter. It failed to pay back a bond worth a little more than $152 million. What's even more shocking is that this bond was rated AAA. AAA is the highest possible rating that any bond can get in the market. AAA bonds are considered the safest. But in China, a AAA bond just became a piece of junk. As I said earlier, all of these companies are government-owned. Why do people invest in a government-owned entity? Because it is considered a safe investment. The logic is, even if there is a default, the government will rescue the company. But in China, this logic is failing. Because here, the government cannot keep up with its own debt payments. Let me show you something. The size of China's debt crisis. By the end of this year, China's local government debt is expected to touch, listen to this, local government debt expected to touch $4 trillion. $4 trillion. Reports say there's panic. Current and former officials of China's finance ministry are raising an alarm. The risk of defaults is real. They have something called local government financial vehicles. These are basically financing companies. They're owned by the government. These companies, these government firms have abandoned bond sales now and loan applications. They are supposed to raise money for government projects, but they're not getting any money now. They're struggling to get capital. The lenders are not confident about government bonds in China. So they're demanding higher interest rates. Do you know what all of this means? It means the money is drying up. Lenders are losing faith in China's ability to repay. The popular perception is that China is flush with cash. Breaking news, it isn't. China is mired in a debt crisis. It is humongous and it remains hidden behind clever accounting and state concessions. Let me give you one more example. Earlier this year, reports said that China's defaults had dropped by 20%. Those reports were misleading. Chinese borrowers were not making their payments. They had only delayed the default because Beijing gave them some relief measures. At least a dozen companies managed to survive because of this, thanks to delayed repayments, bond swapping, or cancellation of early repayment. These measures just bought time. They couldn't make the debt go away. And how much time can you buy anyway? So now those defaults are picking up. And the Chinese government is not willing to help. Last month, China's vice premier made a pledge. He said the Chinese state will show, quote-unquote, zero tolerance for defaults, which means that China is now willing to let state-owned companies fail. And it's already happening, by the way. In 2020, 10 state-owned enterprises defaulted on bonds worth 54 billion yuan. This was 42% of the total defaults. In the past 5 years, 25 state firms defaulted on a little more than 156 billion worth of bonds, billion yuan. So you see how much this crisis has grown from 33% in 5 years to 42% in 1 year. That is the extent of China's debt crisis. Why should you care? Because it will reach you. China's financial tremors will affect the whole world. All the investors who bet on China's growth story, and there are a lot of them, already the losses are running into billions. The defaults at Brilliance and Yongcheng triggered a major sell-off in the bond market. Basically, people who own the bonds of these companies sold them. And this led to a massive loss, $9 billion according to one estimate. So here's the whole story in a nutshell. China's state-owned companies are failing. China either doesn't have the money or the desire to keep them afloat. And this disaster will hit the whole world. Thank you for watching Gravitas on WION's YouTube channel. If you want to stay up to date with what's happening around the world, then subscribe to our channel and don't forget to like and share. Thank you very much for watching WION. The world is one.